Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 18th of April. Now, as we slide towards the Easter break, we do have a lot to play for today. So let me just give you a bit of a rundown. There's plenty happening over the last, 12 to 24 hours. So let's just piece it together. So just looking at the MyFX Trading Hub, let me just actually scroll down initially and just have a look at the overall market conditions. Now, we've got a situation where recent data, okay, it's been quite localized and impacting specific countries as opposed to the US data, which impacts everything. So the Chinese data, it did have the Aussie shooting higher. That has really stalled after the US trade numbers, which to me don't really come into play, showed the trade balance in the US decreasing to its lowest levels, I think, for quite some time. I can't remember the time frame, but that has really sort of put a mixed signal in the market, and has the general majors, some of them are moving up, some are moving down, some are just moving sideways. As we come into the major releases for today, I think the currency is going to react on the individual data, so treat them all as individual events. The market drivers, well, the US-China relation situation is going to intensify, I think, pretty shortly. Brexit, it's taken a little bit of a back foot with the extension through to the end of October, but the UK fundamentals to me aren't really coming into play at the moment. So I'm not sure if sterling is still a good trading option just at the moment. Now let's just come up here and have a look. I've just revised some of the direction here. So the technical outlook for some of the pairs. The US dollar index, well, it's pretty steady, okay, still trading sideways. Dollar yen, it's broken higher, but it hasn't gone on with it, which sort of opens up a move to the downside in my eyes, but we'll have to wait and see how those US retail sales figures come out later today. That'll be the key for dollar yen. Dollar Swiss, out of all the pairs, does look like it has a very clear direction at the moment. That's probably one of the key pairs to be focusing on, because it's just been moving higher and higher and it keeps going, as opposed to dollar yen, which is stalled. Now the Aussie, this is the strange one, right? So Aussie popped yesterday on those stronger Chinese numbers. At the same time, Kiwi bounced back from really weak CPI numbers, but you can just see from the price action, Kiwi doesn't want to go up at this stage, and that's because the market is factoring in a potential rate cut from the RBNZ at the next meeting, or some more aggressive words on that. Whereas the Aussie, okay, the fundamental sentiment just at the moment is still down. The situation is the RBA gave us a clear signal, or clear direction, not even a clear signal, the other week. If you come over to the 247 trade zone, you'll find the situation for the RBA minutes. Now, they've basically said if unemployment rises, okay, and inflation doesn't move higher, let me just scroll back up. This is the key component here. Then there is a situation, a scenario for them to decrease rates. Now, what they've done, they've spelled it out plain and simple. So when you come back to looking at the pairs, Aussie's drifted back into the range, but we have the first part of the major release today, the Aussie employment data. This is going to be key to the next movement, and actually the key to the CPI numbers out of Australia next week. So you put 1 and 2 together, you get a rate cut. So if the employment numbers are weak, the Aussie will move lower with the general fundamental sentiment, because the market will anticipate weaker or stagnant CPI next week, and that really puts the RBA under huge pressure to cut rates. Now, that picture may change because of those Chinese growth numbers, but we don't have anything else to work with at the moment. So just play with that as we go. If the numbers are strong, well then, it sort of neutralizes that whole situation, and and that takes the pressure off next week's inflation numbers. But that's the key to it. I'll be running a live sort of webinar for the workshop attendees on that, to give you a bit more insight into what's happening around the decision-making process around that release. Now, as we come through the rest of the day, come into the North American, the European session, we've got a couple of key releases. Once again, I'm not so sure about UK retail sales. Historically, I mean, it is a really high impacting number, but does Brexit neutralise it? I'm still thinking it does, so I'm not sort of super keen on it. But I will be watching the flow-on effect after the Aussie employment numbers, these German flash manufacturing numbers. Now, they are important. I think they did move the market around somewhat. It dropped significantly after last month's numbers. So keep an eye on those German numbers, and they are a good one because you can hold positions through that. And then we start to come into that North American session. We've just had, dollar CAD sort of whipping about all over the place, which is really tough to be sort of trying to work out where to get in, where to get out on dollar CAD with all the mixed data. So that's going to be a little bit tricky. To me, the US retail sales numbers does give us an opportunity. We do have clear direction on dollar yen and dollar Swiss, so strong numbers. Those pairs should continue higher, and that should, depending on where the other numbers drop today, okay, and in particular the Aussie numbers, we could see a significant move. So if we see weak employment numbers and then we see strong US retail sales figures, then you've got to expect the Aussie to be under 71 cents. And that's where the ticket is. At the same time, if the employment numbers for Australia are up and the numbers here in the US are weak, well, then we're going to get a ricochet and the Aussie will be back above, probably up towards 72.50. So put the data together today, okay? The Aussie data is just one component of the leg. Then you've got the obviously the European and the sterling data. But for me, the Aussie data combined with the US data, it really brings the Aussie into play. The other major pairs will come under some action with the US retail sales, but not as much as the Aussie, which has huge potential with those two releases. Now, if the Aussie data is weak and the US data is weak, well, we're probably not going to get much movement. So understand that as you go through the day. Those Canadian retail sales figures, well, I'm not so sure about the price action on dollar CAD. It looks almost too tricky for me. But for those traders who are looking to get a bit ahead on the Aussie data, I've given you a complete run through here in the 247 trade zone on the expectations and what I see is the two potential trading opportunities and what my preference is and where I see the best pairs to hit and what to look out for in the data. So check that out in the 247 trade zone. It's a good one. The other traders that have been through the workshop, I'll see you guys in that live webinar through the day. That'll be recorded and I'll send that out to you later on. All right, guys, that's it from me. This is probably the best looking day. I know the Kiwi, a lot of guys made some cash out of the Kiwi CPI yesterday, but to me, this is where we get a connection of the data. Chinese connecting with the Aussie data, connecting with the US retail sales. This is where we could see a potential move. And what you're doing is with all your preparation and your consistency on your analysis, it comes down to these little moments where you have a chance to identify the opportunity. And if it's good, as George Soros said, go for the jugular. All right, this is big time. All right, guys, have a good trade day. We'll see you in the 247 trade zone. Cheerio.